Hello guys, welcome to the Trading Parrot. 5 days ago, I published this video, record selling wall, it won't be that easy. I wasn't necessarily only talking about the record selling wall that we still have around the 70k, but there were other factors that caused the price to retrace to 65k, which we actually did during this week. The question is, are we actually done? We need to wait out all the elements, and there are a few of them pending that are still calling for some business to do at some lower prices. Let's go through them, let's balance them out and compare with the things that are ready for ignition as well. There are some things that are looking very bullish, and let's try to conclude how long until we get that hopefully final explosion into an all-time high. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. And yes guys, yesterday morning video made 350 likes, and for the first time an altcoin video in my channel gets 200 likes. Really, thank you so much for that. That is encouraging that we are going in the right direction. I'll continue to put more videos on altcoins. Just make sure that you leave in the comment of those some suggestions so I can cover in the upcoming days as well. If you're wondering what happened with the update last night, why there was any update on the Trading Parrot, that's because from today, 3 times a week, the evening update is going to appear in the channel Coin Bureau Trading. Yes, we've been doing a collaboration with Coin Bureau channel, and I have already put 2 videos in there, this one in here, and this was the first one 13 days ago. Last night video was placed in Coin Bureau Trading. Make sure that you are also subscribed to this channel so you don't miss the whole story. I put out 1 video in the morning, 1 in the afternoon, at least on working days. So I'll be seeing you in either of these channels. Tonight there's a video coming on Paul Baron Network. That's the one that's gonna replace the one in the evening. Make sure that you don't miss that video. We're gonna cover Bitcoin, Ethereum, and other altcoins as well. And yes, as I said in the beginning of the video, there are some pending things to do with Bitcoin. And probably the smallest deal that we need to get sorted as soon as possible is the CME gap located from 66.8 to 66.6. That's just a 200 gap that is pending there. It's pretty easy to get out of the way. If you think about it, how many times we came into 66.8 to find support to wick down below slightly, we could do that very easily. Apparently the CME gap at the top was valid and the price went straight to hit it and to take it out. There was immediately a bounce after the top of the CME gap, indicating that liquidity from CME was placed there and now is out of the way. So in one way of interpreting this is that the liquidity that was attracting the price into 69 is no longer there. And the selling wall at 70k right above this price is the one that we are going to also look in this video. Some things are developing there, are causing me some concerns about how easy can we really break that wall. The second consideration is if you pay attention to the CME chart, which is different from the Binance that we usually watch, you're going to notice that we almost have equal highs or a double bottom potential formation. On the Binance, you're going to notice that this top is way lower compared to CME. Another interesting small detail to keep in mind. Here we are on the 4-hour, but on Binance, and you can see that this high is way lower than that. On the other chart, they look almost the same. And one of my concerns at the moment on the 4-hour is this shape. I hate when the price action is doing something like this. This is not a bull flag. A bull flag will be like this, or ideally with a triangle pointing down, even more bullish. But when you start putting higher highs like this, and then you cannot manage to overcome the last high, this looks pretty much like the price action of 2021 when you look at it in the weekly time frame, and eventually we crash back down. So let's be careful with this pattern. It's not 100% necessarily true that we have to break below it, but this is a bearish formation for me, definitely. The second thing I want to say is the RSI on the 4-hour now is becoming my enemy. I'm not liking it because there is a fake out to the downside. We just had this price action. I went to sleep. It broke out all the way to the other extreme. This is indicating that volatility at the moment is all over the place on the 4-hour. It's not respecting things. We have another fake out at 2 a.m. breaking down within the range. I seriously cannot take this in consideration at the moment as a breakdown. This might as well break out and continue going higher, or finally respect the resistance and come down for another low. When this happens and you get two consecutive opposite poles fake outs, what I do is I skip that time frame from the 4 hour. We step up into the daily time frame to start looking for things. But once again, the RSI on the far and the 4 hour might not be today helping us that much, but the actual price action on the 4 hour to me is very clear. So finally, let's go back into the daily time frame, and you can see we have the megaphone pattern. We had the breakout above the trend line formed by the highs of the price, not the closes of the price. That is a more challenging approach, but that is what I prefer to use when we are in the context of still monetary policies being tight. They are easing little by little, but at a very slow pace. So we need to be cautious with this breakout here to not turn into a liquidity hunt. And at the moment, what I'm seeing, let me zoom in a little bit more. You can see that we have the market cipher dot at the top, just indicating a bearish divergence. That is not a point of action, but it's information in the chart for us to use. We came back down to 65K. We closed a red candle below the point of control. The point of control is that horizontal line in red that represents the highest traded volume in the volume profile. And being below is bearish, being above is bullish. And at the moment, you can see that we pierce below, we close below, and we manage to come back up. This brown line in here is the trend line of the breakout. So we could say that once again, we are attempting to break out and holding support on a daily candle. But this daily candle is going to say a lot. Closing above it is another confirmation, but you can see that even if we confirm already, we came back below. So there seems to be some business still, not just above it, but in this area in here. There could be a lot more action below that to trap more shorts, to gain the momentum necessary to deal with what is in here. And what is in there, we're going to see later in the order book. It's a little bit sketchy, and I'll show it to you and I'll give you my thoughts. On the RSI, on the daily, things are still not as complicated as on the 4 hour, and that sometimes is the case, and we just need to move on with a higher time frame. In this case, you can see that we couldn't make it to the top of the range like we did the two past times that we were at those levels. I have moved our target from yesterday being in here. I have moved it to there just because there is a chance that from here we actually fulfill that and we see another touch of that. We will have to see. Just for your information, that level at the moment is 74, and 74 at the moment on the RSI is located roughly at 73.5. That is pretty much the all-time high. So if we use all our energy and we get to the top of the range at the moment, all we can do is hit the all-time high, hit those liquidations, and hopefully that doesn't turn into a double top. Personally, if you ask me, I prefer to go back into the bottom of the range and from there do that attempt once again. But if we have to do that now, bear in mind that the highest likelihood target, or the most that we can squeeze that move up without losing steam, is the actual previous all-time high. Not necessarily higher than that. Possible, but low likely to get above the all-time high from where we are. Let's have a look at the open interest because it still remains above the 21 billion mark. It hasn't yet come back down to the third level or anything like that. So as I've been saying multiple times in the videos, many times open interest precedes the price action. For example, in here we had the breakout of the open interest in the third layer and the price was still below it, and this double bottom formation play out before getting us into 20.3 billion, and then the price came in and follow up. The things I'm not liking with this current price action, apart from the fact that we have that CME gap sitting down below us, is that spot is selling so aggressively. From this moment, 29th of September, spot hasn't done anything apart from selling, whereas futures have been taking advantage of all the swings. But that's what future does all the time. and overall is still a trend down. Good things is that there's still no distribution from big whales. They're using the seasonality of Bitcoin to accumulate and accumulate. Long-term holders are slowing down on their selling. There has been roughly less than 30% selling of what they accumulated from July, which is still good. Really not as good, but what is good is that there is the slowdown. You can see in detail there that is kind of rolling up in this case. And on the weekly, the megaphone pattern is looking still beautiful, still worth making a poster of this and putting it somewhere because it looks so similar to the forecast that has been slightly amended, but overall the core of the idea of the breakout that we placed in July has been respected pretty good. On the MACD, we have this upcoming potential bearish cross. Bearish crosses in this range has been a disaster with 20% drops. If we confirm this signal, we should have some sort of pullback. Hopefully this time the seasonality, the accumulation from whales, and the long-term holders still holding some of their accumulation should play in our favor to reduce the drawdowns that were mental before with typically 20%, 25%. Hopefully in this case, it's just a mild 7 to 10%, hopefully not more than that. Notice that this can still be prevented, but in order to prevent the bearish cross, we need to have a huge massive candle to probably 75, 80K. Gold is looking like this week is potentially gonna give us the pleasure of seeing some topping candle here, there. Hopefully 1 or 2 weeks after my forecast of seeing a top on gold, which is definitely good for Bitcoin. What I forgot to do is to enable the bullish hive, which 2 weeks ago gave us as well a sell signal on the weekly. Really important signal the past time that this trigger, it played out perfectly against the target. It went beyond with 8.82% drawdown. If we were to do that in here, the target of the actual signal says 2.465, which is definitely going to leave a lot of people that are currently accumulating gold like crazy opening their mouths. A correction like that should definitely help Bitcoin. And the second potentially good thing is how perfect we are bouncing from this level that we were looking to see some rejection on the rally of dollar. RSI 58 weekly. Why that level? Because it's the resistance of this trend line on the RSI has been respected since May 2022 and it has been touched already. It even placed the RSI above the breakout area. That is evident if we zoom in massively here. You can see that at some point the price was above the trend line just a few dollars and it has seen a rejection that looks huge but actually is just 0.5% at the moment. Hopefully that is the signal that we need. Hopefully next week we can go below that, confirming that we have found at least a local top for the dollar that has had a huge rally since late September. That is also something good for Bitcoin if it plays out. So going into liquidity, we have taken the liquidity of number 2, which is the one that I mentioned yesterday in CoinBureau trading channel. A clear path, do we have it? And if the price had to move somewhere, the most liquidity at the moment in the scalping chart, short term, is the one at 69.7, very close to 70K. If it had to go below, it needs to move a lot more. At the top, it needs to move 1.9K. To go to hit this one here and put a lower low, it needs to move 2.6. So from the point of view of the scalping chart liquidity pools, the lowest hanging fruit is above the price. But we need still to talk in this video about what's going on at 70K. There are new developments that are quite sketchy. And we have the CME gap at 66.6. And we have the rolling over of the price on the 4 hours. So we need to try to make our best to put all these things on the table and understand what could be the short-term move for Bitcoin over the weekend, which is also very low liquidity. Going into the 4 hour, we can see with this week at 65K, we have this left over at 64.8. The lowest 60s have a lot more. It's a lot more clear if we look at this in this way. And 61.5 on CoinGlass is the largest level of liquidation of the past 3 months only. Yesterday, we took out these fair value gaps at the top that were coinciding with the liquidity as well from the pools. And at the moment, we are in an odd situation when it comes to fair value gaps. There's almost nothing above and below the price. So price really needs to make a big decision in here. Can it hit the 70K, or is it going to go as low as 64.8 and start consuming this until it gets to 63? That takes us again into that 70K controversial area that we need to review later in the video. Yesterday we talked about the 68K, and I think we took that level because the price went to 68.8 in some exchanges. And indeed, now the level has less liquidity than yesterday. Yesterday it had 500 million, which tells me that they got liquidated and a new short generation of shorts enter at the same price, shorting once again 68K. Point is that the price is right there, and once 68 is taken in the past 30 days, there is not much more to take above the price from liquidation levels from a very short time frame in the past, at least. Remember that trading different includes the 4-hour time frame that shows liquidity in here from a longer span than just 30 days. And here is where I wanted to talk about the important stuff. On Sunday, when I made that video about things are not gonna be easy, we had 97 million in resistance from Ask Liquidity in the order book. That in the past days, we were counting every small victory from that liquidity going down to 84, to 83, to 81, finally. And I think a lot of people were looking at that at the same time. I noticed as well on crypto Twitter. But today I have bad news. That has increased to 95 million, very similar to what we have over the weekend. There seems to be an ongoing interest to keep the price below 70K. And you might think, okay, it's just 100 million. We can get over that very easily. And it might be the case that we break above that level, and we have to do it eventually. But we cannot ignore the fact that it has taken in the past 3 years way less Ask Liquidity to drop the price big. The only Ask Liquidity that I can see in this span of 3 years that is larger than that is this one in the beginning of this year. But there is a caveat. This liquidity was never touched. The price went up until 46K and the liquidity was at 50K. So it was just a bluff. They put the liquidity there. They caused the psychological effect they wanted to cause. The price went down from 46 to 39. They bought cheap and then they pushed the price 200% up, liquidating all the shorts. So could it be the case that that 70K that is slightly closer to the price now is going to keep some longs stressed, causing it to dump the price so they can buy cheap? Or could it be that the price now gets into that 70K and the orders get actually executed, pushing the price lower too? 95 million is a lot more than what it took to make any of these big dips that you can see in the past 3 years. In the bear market and also in the bull market, in all these dips, there is 81 million. In here, there's 53. At 73, there was 73 million. And now there is 95 million. I can see 85 million in here. In this drop to 20K, there was 110 million. That's significant. 97 million on that drop there. Point is, not very often the price crosses 100 million in all this time frame as if it wasn't there, executing the orders and just continuing higher. It is rare. And speaking about the alpha coming from net longs and shorts delta that I use on Trading Light website, you can see that the shorts have managed to break below the trend line, just like they did in here. These areas are areas of interest because it crosses the whole range from being fully long into being fully full of shorts. And it represents an opportunity because with that extreme level of shorts is typically where all the bid happens. At the same time, at that point, you see the largest liquidations of longs, you flash them, and then you have a big opportunity to ride these big moves up of 30%. At the moment, the problem is that the alpha works, but it works better after you have seen a big move to the downside. So in here, you're at the bottom of the range, you wait until you see big red candles and liquidations of longs, and that is where it works the best, this alpha. In here we have the drop into 65K, and we continue to go lower, it means that more shorts are entering. There's still something ongoing in here with the shorts, and I don't see yet big blue candles of longs having been liquidated. Notice that in this moment there was that liquidation there, and on this moment in here there were this candle there. So far we just have this one at 100, and in all this area in here is pretty balanced between longs and shorts liquidated. So it will be awesome and a lot better alpha if we saw a blue candle significant with long liquidations, this coming slightly lower, and then eventually that will break out to the upside and we could see a big move up. This data from High Block Capital is also supporting that currently we have a flip of the delta into the green, meaning now the longs are more exposed to liquidations with these levels at the bottom in here. And all these things that I'm covering, all these concerns and small details, is just for the swings. It's not for canceling out the bull market. It's not for saying that this stupidly ridiculous amount of liquidity that there is at stake here won't get hit by the market maker. Are you kidding me? The exchanges are salivating with taking this liquidity for themselves in fees. They might even counter trade all these people to take advantage of them. That is not at stake. What we are saying is that they can manipulate people in a similar way that it happened in the past before this rally in there, roughly around October last year, where they got all the people to sell 5K down, and then they were waiting right there to ride all the way up. And you can see the amount of liquidations of longs that there is at the moment on High Block Capital in here. Relative to the shorts being exposed there, now it's the longs once again. So careful with that for the short term, not for canceling out the bull market. We are also at record levels of ask liquidity. It's even below the trend line. I mean, I struggle to push the trend line to touch this. I need to also touch that level. So this is way beyond what we want. And typically buying areas for Bitcoin is when there is a lot of bidding going on with the price going down. And that happened on this low in there. You can see overlapping that. In this low and in these two areas in there, they were also good opportunities to buy. Now for me, it's all about holding. And if there is a big correction, adding. But at these prices of 68, a swing long is very high risk, particularly with leverage. I want to cover, before I let you go, the stochastic RSI on the monthly. There are some good developments in here towards our forecast. In red, I left the forecast. This has been like this since pretty much July. And I haven't covered this chart since then. And I'm seeing some things that are starting to look like the forecast, and I want to cover that. We have a bearish cross at 73.5. At that point, we were selling Bitcoin, publishing that on Twitter, and since then, the stochastic RSI has been resetting into this area. We use as a model what happened in the previous bull market, where we had a full drop towards 20, which is the last line in the sand. We have a bullish cross there, and that bullish cross was thanks to this new all-time high, which is a dead cat bounce only, even if it made a higher high. And that short-lived bull cross turned into a bear cross immediately, taking us back into the bear market. Where are we here relative to that? And just temporarily, I'm gonna delete my forecast. I'll put it back in a second, and I'll show you with a magnifier glass this area in the chart. You can see that it's curving towards a bull cross, the stochastic RSI. And my expectations, if we get that bull cross, is either that makes a full move into the top of the range, which is a too optimistic option in my opinion. It can happen, but it's low likely relative to the second plan, which is to just have that bull cross follow, but sometimes staying here in the middle and getting a bear cross immediately after, calling out for the beginning of a bear market. Remember that the span of this bull market, based on halving events and cycles of 4 years, is for Bitcoin to find a top somewhere in 2025. And in this area of the chart is 2025. So it wouldn't make it much further than that, in my opinion. Good news and takeaway from this is that we are getting close to that bull cross. And I think if November as a decisive month, typically for what happens up until March, behaves during elections and all the other things that are going on in the world, we could see that happening, confirming not that we necessarily need to go to the top of the range, but we can have some sort of move like this. Unfortunately, a move like that is a dead cat bounce, but you can see a dead cat bounce on the technicals can cause the price to still put an all-time high, and that is a bearish divergence. But a bearish divergence can get us pretty high. It can get us to 95k. You can be losing steam while still being very fast. Imagine you are in a race car, you are at 150 kilometers per hour, you press the brake, so you are slowing down in speed, but you can still get very high speed to get still a fine from police. Guys, make sure that you don't miss the video tonight. There won't be an update in the Trading Parrot channel on YouTube. It's going to be on Paul Barron Network. Make sure that you subscribe him so you don't miss my video coming out later tonight. If you want to trade Bitcoin or any altcoins, I do recommend that you have a look at the exchange that I'm currently using called Bluffing. It took me just 5 minutes to open 2 different accounts. And that's thanks to not needing KYC anywhere in the world to open an account here. And if you use the link in the description to do so, you get 10,000 bonus subject on trading volume and the lowest fees to trade as well. And if you already have an exchange and you are enjoying it, have a look at the products that I have selected in the description. These are pretty much all my all-time favorites in crypto, including a selection of the best exchanges that I use, the best data and charting that I use on a daily basis to find what's the next move, followed by trading with bots, which they are working hard in the background right now, crypto wallets and more data, all of them with discounts, the lowest fees to trades, bonuses, etc. Any that you pick, you are really supporting the channel to continue putting up to 3 videos a day that you can watch all for free. Guys, thanks so much for watching and I'll see you in the next one. Bye bye.